Hello and welcome to another update video about XRP. We want to take a look at the longer time frame chart first. This is the bigger picture. I do that, like every 2 or 3 videos, so everybody's on the same page. I still wanted to highlight again this sort of yellow line. It is, it doesn't really matter where exactly it's sitting. Could be 66 cents, that's where it's now. Could be 67, 68. It's not like one level, okay, that is like a breakout level, but still I think 66 cents, it's the last swing high. And what we can see is that this line differentiates sort of bullish and bearish, you could say. This is very much divided, in this triangle pattern that we're tracking here, sort of divided into sections. So everything here, the market spent a lot of time in this, let's call it bearish range, in the lower half of the triangle, not so much time in the upper half of the triangle. But if we can break above that level, it indicates that there could be, first of all, a surge. There have been quite a bit of, quite a few rallies, quite a bit of upside momentum whenever that level broke. It's not necessarily sustainable, so regular profit taking is key in my opinion. Just sort of from the analysis, what the past data is showing us. And also, it might make sense to pay attention to the upper trend line of this triangle pattern if there is a break to the upside. And the breakout point, it is 66 cents, but I don't really care about it. 66.5, 67, 68, that's sort of just the micro patterns. But this is key. Then it's important to understand that we're moving in a sideways triangle. In these sideways triangles, well, we often don't see impulsive price action. We see a lot of choppy price action, lot of overlapping price action, which is what we call corrective. Corrective price structures always leave a lot of room for interpretation. So that is one of the benefits of Elliott wave, is to help us understand that we are dealing with corrective structures. That's one of the main benefits. So things are less clear, okay? We have less of an edge just by tracking the patterns. It's very important information. That means when you're trading this based on Elliott wave, maybe you have a different edge, but if you're trading this with Elliott wave, you just need to be on the side of caution. All it means is we are, there's a lot of choppy price action, and you don't necessarily want to get caught in the chop when you're trading this. So that's a lot of important information that comes just from the Elliott wave analysis itself. Because someone who's understanding Elliott looks at the chart and understands straight away, oh, there is nothing impulsive here. This is all corrective. And based on what their trading plan is, they might choose not to trade it at all. Okay, so I just try to help you here understand the market structure. The triangle pattern as well indicates indecision. So it could easily break to the upside. It could break to the downside. Important is to understand that what are the key levels. The key breakout point to the upside, for example, is $2.06. That's this green line. It's the previous swing high from April 2021. Because this is a level, if we break above it, the triangle will be invalidated and we have a breakout point to the upside. That's the next key breakout point. But in both scenarios I'm tracking, there's a yellow wave count and the white wave count. They're both triangles. I can call it a wave 4 triangle. Wave 4s like to be triangles, in which we completed an A wave, a B wave, a C wave. The D wave could be unfolding now, and then an E wave down, forming a higher low before we go up. That would represent a full triangle in wave 4. It's also possible that the triangle is slightly different, A, B, C, D, E in a B wave, and we break down. In both scenarios, the triangle isn't finished yet. And in both scenarios, if this is a triangle, there's a chance to go higher in this either wave D in yellow or wave C in white. And I'm tracking that on the smaller time frame. I'm tracking that potential for further upside on the smaller time frame. So let's go to the smaller time frame count. Here you can see this structure. So on the daily chart, this is the X wave low. This was the swing low in June. So we have that as well down here in, no, it was July. Okay. So this swing low in July, and there was a support area to which the price reacted. There was another support area to which the price reacted, which is this one. I just moved it to the right. Okay, so price reacted twice to our support regions. That's really what matters. The support levels, the resistance levels, not so much the micro count, because all of the price action here as well on the smaller time frame is simply like just corrective again. Likely it will change a lot. That's what is likely. So I can promise you that it's gonna change. Again, that's a very important outcome from the analysis, that we know that with high likelihood the microstructures are going to change. They are less reliable, so we have to be more careful. Okay. The movement to the upside from the August low, 5th of August, to the upside could be a C wave in the white count, but it has to be a diagonal. It can't be an impulse, and that again means we have to be on the side of caution. So I would just say best is to just be aware of the relevant support levels, especially here, 42.6 cents. That's the key support. Any break below it will mean that we are likely going to fall back into the larger pattern, which likely ended in July, 5th of July. So it would mean that the potential upside move that might have started is not yet started. It was just some kind of a weird correction. So for a breakout to the upside, I think that's really what we want to see next, to get some indication that we are actually on the move to the upside, into the direction of, first of all, 72 cents, then 81, then 88 cents. I need to see a break above the red trend line first. At the moment, we're just moving sideways. There isn't much going on, right? So it's pretty boring. It was quite interesting, and now you can see, the excitement fades out again. Remember what I highlighted to you when we had this small pump? This was news related, around the 7th of August. And my commentary was around that these news-related rallies, they often end in 3-wave rallies, and then it takes a long time to correct again. And that's what we see again. It's just a pattern that we see again and again with XRP, so just be aware of that. So yeah, overall situation hasn't changed. We can still carefully look towards higher prices, but be aware that 42.6 cents is the key support level here. Yeah, that's the update about XRP. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.